Hey guys, today I'm going to show you the perfect dividend growth stock of all time. And you got to hear me out when I show you this because it's a stock we all know, we all most likely have exposure to through like an S&P 500, but I'm telling you, you should individually buy this company because I'm going to show you the numbers. I personally think this is an amazing dividend growth stock, and we're actually going over a few different stocks in here, but I want to go over the first stock, and you got to hear me out on this. The first stock we're going over is Google, and I'm going to go straight to their numbers because I'm going to get straight to the point here. They made $24 billion in the most recent quarter. Remember that. They made $24 billion just in one quarter, and their dividend cost $2.5 billion or $2.47 billion, which is literally nothing. Like, they can pay for the entire years of dividend just in one quarter. But look at this. They right now have a dividend yield of 0.48%, so 0.5% dividend yield. So look at this. If they're spending $2.47 billion in dividends, let's see how much could they realistically spend. Well, they're spending over $15 billion every single quarter on stock buybacks. What if they instead stopped doing stock buybacks and did it pure dividends? Because that's what's going to happen someday. They're going to switch over from buybacks to dividends. They're going to slowly grow their dividend over time, but they're easily able to spend $15 billion right now a quarter on dividends if they wanted to, but they're choosing not to. So that's what I love about Google. And that's the point. That's what not a lot of people get. So they made $24 billion of net income and they made $26 billion of free cash flow. So you could look at the free cash flow or you could look at the net income. Both of them have a very, very small payout ratio for the dividend. So that's what I love about Google. That's why I own some Google in my Robinhood portfolio, which I'll show you very shortly. But the next tech stock I want to show you is actually Meta, and they just reported earnings, so we get to see how good they were. And they were super good. Like, in my opinion, they had some amazing numbers. So they made $14 billion, and that's up 82% year over year. But remember that number. They made $14 billion in net income. So this is what's crazy. How much do you think their dividend cost? They actually have a higher dividend yield than Google, I believe, but it only cost $1.27 billion. So this is another company that could afford to triple their dividend, and they will one day. So let's see how much they're spending on buybacks, because they could stop doing buybacks and spend it on dividends. This is all extra money at the end of the day. And look at this. If you average out the past year, they spent $15 billion last quarter. But they could spend, probably $10 billion every single quarter on dividends. So they could almost 10x their dividend. I'm sure in 5 years, when they grow their net income from where it is today, they could afford to 10x their dividend. Let's see their free cash flow. It was $19 billion. So they made $14 billion in net income. But look at the free cash flow down here. They are a free cash flow machine, $20 billion. So that's what I'm saying from a pure dividend point of view. This is great. So look at this. Also, I'll show you another thing about Meta. They have a phenomenal balance sheet. So right now, Meta has total debt of $18 billion, which is actually down 4% from the previous year. But remember that they have $18 billion of total debt. And how much cash do they have? So wow, they have $25 billion of cash right now. So way more cash than debt right now. And guess what that cash is doing? This is why Meta actually benefits from the high interest rate environment. Or really, all these companies like Google, Apple, Microsoft, all these are in the same boat. What they do is they just keep all their cash in the money market funds and the 1 to 3 week treasury bills. So Meta's $25 billion of cash made them $244 million of pure interest, which is crazy. Like that's all free money for them that they can do whatever they want with. So that's why Meta, in my opinion, is a phenomenal company. And that's actually why I own them here in my Robinhood portfolio, which we'll actually log into real quick. I'll show you how much. But here's what I'm actually want to talk to you guys about. I actually want to have more exposure to Meta and Google. I'm really thinking about cranking up my Google shares especially. So I only have 7 shares of Google right now. I only have 3 shares of Meta. Let me show you my total percentage change. So we're literally only up 0.61% on Google now. So right now could be a good opportunity for me to buy some more Google shares because I'm young and I really want these dividend growth stocks. Also, McDonald's is doing crazy right now. We're up 12% on them. But Meta, so Meta, the only thing that saved them was their amazing earnings. So the rest of the market tanked, but Meta had some amazing earnings. So we're still up just about 10% on Meta, which is pretty cool. Another stock that just paid a dividend is Salesforce, ticker symbol CRM. So we're actually down on our Salesforce shares now. We're down 0.14%, but Salesforce just started paying a dividend like Google and Meta, because these are also companies that just started paying their dividend. So let's actually real quick, it's the last stock we'll look at here. I want to show you why I love Salesforce so much, because if you don't know, Salesforce is actually my second largest holding out of all my portfolios. So Salesforce is my second largest stock. So let me show you why I love Salesforce so much. So first off, look at this net income growth. This company really got serious in the past year. This company used to, sometimes lose money. But look at this. They are very consistent now, making well over $1 billion every single quarter. So remember that. In the most recent quarter, they made $1.53 billion. And this net income is expected to grow so much, but their dividend only cost $388 million. So let's see how much they're doing on stock buybacks. So look at this. So they have room to 4x their dividend right now, because they're spending 4x the amount of money on stock buybacks. They spent $1.6 billion in the most recent quarter. They almost spend $1.6 billion on buybacks every single quarter. Look at this. So they used to issue shares. They used to be a dilutive company. Now they're like, all right, we're going to give some investor returns. So they've just cranked up the stock buybacks. So this is another reason why this is a very consistent trend with a lot of my stocks. They have a very low payout ratio, and they're also doing tons of stock buybacks. I feel that's the perfect stocks for me to own at my age. So Salesforce, they have total long-term debt. This is the nasty stuff which is down 10% year over year. That's great, of $8.43 billion. And they have cash on hand right now of $9.96 billion. And remember, that's $9.96 billion after spending $1.6 billion on buybacks and the $400 million on their dividend. So let's see how much money they're making in interest. So look at this. They made $167 million of pure interest in the most recent quarter, which is the highest they ever made, because they really just started keeping a lot of cash. Well, actually, they've always had this amount of cash. But I guess that just goes to show how the high interest rate environment is actually benefiting Salesforce. And they're a software. Yeah, look at this phenomenal balance sheet. So yeah, this is what I love about Salesforce. Oh yeah, Salesforce, we looked at their net income. Let me talk to you about their free cash flow. Did you know Salesforce actually makes more free cash flow than Coca-Cola? Like, look at this. They made $6.25 billion of free cash flow in the most recent quarter, up 39% year over year. So it's always Q1 when they make their huge amount of earnings. They usually make $3-4 billion. But in the most recent quarter, they made $6.25 billion. It was amazing. And that's why I was surprised when Salesforce dipped. That's why I bought the dip. If you see this green line down here, I bought a ton of shares at this 222 level. And this is where my average cost basis is on my Robinhood portfolio. I forgot, we actually own some shares of Salesforce in our Webull portfolio, which I don't really go into much. And since we were talking about Coca-Cola, let me show you that I'm actually surprised by this. Coca-Cola is at all-time highs. And I actually think it's very similar to McDonald's. I think it's a defensive stock. When all of big tech started falling, McDonald's and Coca-Cola started going up, despite, the kind of high valuations. And they still at all-time highs have a dividend yield of 2.8%, which is higher than all the stocks we looked at today. Actually, did I even show you guys the dividend yields of Salesforce? Let me see what their yield is. So Salesforce only has a dividend yield of 0.66%. And the forward P ratio is 25. That's what I like to look at, because forward-looking, a forward P ratio of 25 is very fair. And let me actually show you Meta. So Meta also had a kind of high, not really. Okay, so 0.41% dividend yield. But look at the valuation. I can justify paying this valuation of 24 forward PE ratio. So yeah, that was kind of all I wanted to talk to you guys about. Let me know what your thoughts about this are. I know I'm kind of just recommending big tech, but I hope you appreciate how I break down all the numbers and show you why and how much room they have to raise their dividend and all the stock buybacks that they're doing. So I really do hope you guys have a great trading week next week, and I will see you guys in the next video.